Well, Morgan Stanley's shares are now up again in the pre-market, up by about 2%, despite coming in with some earnings that were essentially a little bit light on the trading side, which is what we've seen with some of the other banks that have reported so far this week and last. Joining us for more on the Morgan Stanley results is a Bloomberg best on the bank, Charles Peabody at Portales Partners. Charles, good to talk with you again. These Morgan results are in many ways the same of what we've seen with Goldman and others, is it not?
Well, it is, except for the revenue beat was significant. They came in with about $7.8 billion of revenues versus $7.3 expected. And if you add back in roughly $1 billion of DVA charges, the revenue strength was even more impressive. And those charges are what depressed the trading results, particularly on the fixed income side.
Right. And the fixed income side, though, is what people are focusing on. You know, Morgan Stanley just recently had some management changes. They appointed a new person to head their fixed income trading. When are we going to actually see some impact from that, Charles?
Well, you know, this is a company that's still in transition in some of its business. The, rebuilding of the fixed income platform on trading, the Morgan Stanley Smith Barney joint venture, and the asset management are all in transition. But when you look to the future, you're going to see a shift from fixed income to equities and M&A. And that's where Morgan Stanley really showed some strength in the quarter and where its platform is strong.
Charles, we'll leave it there. Appreciate it. Charles Peabody of Portales Partners.